Hello everyone, welcome to another episode of Tech and Teach Unfiltered. Taxes. The name itself sounds like a burden, right? If you are earning 20 lakhs per annum, 4 lakh disappears just in the name of tax. And if you are earning more than 20 lakhs, up to 25 to 30% will be deducted as tax. And this deduction is in the name of direct tax. What about indirect taxes? Have you ever wondered how much do we Indians pay taxes compared to other countries? As per a report published by ABP Live, only 2% of Indians pay income tax. Yes, you heard that right. Out of 140 crore people, only a tiny portion of people pay income tax. The rest, they don't either qualify for taxes or their income comes from sources that are not taxed directly. In the US, 45 to 50% of the people pay income tax, and in the UK, it is even higher. But here's the fact. Countries such as US and UK have lower indirect tax compared to India. In India, GST can go up to 28% on some products. That means even if you don't pay income tax, you end up paying a lot through GST and fuel prices. That is why many people in India feel that even if they don't fall into the income tax bracket, they end up paying more in taxes. One such example is the fuel price. In India, 45 to 50% of fuel prices are going as taxes. That means if you pay rupees 100 for 1 liter of petrol, 45 to 50 rupees go as taxes. In countries like US, the tax on fuel is much lower. That is why the fuel is cheaper there. Another example is the mobile phones. If you buy an iPhone in the US, it is lower compared to India because India adds GST and import duties. So even if your salary is lower in India compared to the US, your expenses are more due to higher taxation. MP Shashi Tharoor in Monday's Lok Sabha session pointed out that the economic growth is not helping everyone equally. The rich are getting much richer faster than everyone else. He pointed out that the top 1% of wealthy people in India controlled 10% of the country's wealth in 1991. But in 2023, that number has gone up to 23%, more than double than the previous. The top 10% of the rich people had 35% of the country's money in 1991, but now that has gone up to 59%. Meanwhile, the poorest 50% of Indians had 20% of the country's income in 1991, but now that has dropped to just 13%. This means if a high income individual or corporations get tax breaks or loopholes, they end up paying lower tax even though they are earning way more higher. Meanwhile, the middle class and the lower income groups are paying a higher percentage of their earnings in taxes, which is making their life harder. In India, a large chunk of revenue comes from indirect taxes such as GST, fuel tax, service charges, etc., which everyone pay equally regardless of their income. A rich and a poor person pay equal amount of GST on daily essentials, but for the poor, it takes up a much large portion of their earnings. The government has already taken some big steps like introducing the new tax regime with lower tax slabs, simplifying GST, and pushing for digital transactions to track tax better. Some ideas the experts have suggested for the government to implement in the tax plan is lowering the GST on daily essentials such as food, healthcare, and education, bringing in more people into the tax net instead of increasing the burden on the people who are already paying it, reducing the fuel costs such that it lowers the inflation and the cost of daily needs, and making the tax filing simpler for individuals so that more people can contribute to paying taxes. It's not about avoiding tax, it's about making taxation fair and ensuring the money is used in better infrastructure, schools, healthcare, and overall economic growth. So, what do you think? Are Indians taxed too high? Should GST be reduced? Or should we focus on bringing in more people into the tax system? Drop your thoughts in the comments below. Please subscribe for further more updates.